Okay. Yeah. Shall we start? Or
Yeah, we can start. So, hi guys, welcome to Chart Traders channel for a free session on this ETF. So, you guys remember we had a similar session long back, 1 year back about ETF, Niftybees and Bank Bees, Gold Bees. Okay, so if we go back, so I shared your screen, Manja. Yeah. Can you stop
yeah,
this
yeah, Manta,
browsing?
yeah, I'm just showing the previous video
Okay,
so
okay.
that if they have not watched, they can just have a look at here.
So it was around August month last year we made these ETF video, and we want to show how effectively how it is so benefit for all the retailers. So that's the reason we are making this video. So you can watch this video again, go back and you can surf on our channel ETF videos. Then you can see that we made the video when Nifty was around 100 rupees. Okay, so now if you look at the Nifty Bees, right? So it is around
170.
170. So imagine it's
Yeah.
60% profit. So by the time if you have invested there, but if you look at the ROI, so complete data we are going to explain that how benefit it is. So let me hand over to Manju. Yeah, go ahead, Manju.
Yeah.
You can
Yeah.
start.
Thanks. Yeah. If you come to our channel, right, go to the playlist, and under playlist you have this free educational videos. Click on that. You will be able to see ETF here. Okay. If you go here, right, just scroll down, you'll be able to see this safe investment to grow your capital. We'll also provide this link. Okay. This, if you open this, right, we gave this one sometime in August 15th last year on Independence Day. We had announced this. Okay. Hemant, some voice echo is coming, I guess. Yeah. Okay. On August 15th, we had given this. So exactly 1 year. So we wanted to update the status on this. Like, does actually ETFs gives the good returns or not? Okay. I just wanted to update on this. Okay. Let us go through that. And note, disclaimer from our side, this channel is only for educational purpose. We are not responsible for any of your trades. Okay. If you are investing or doing something related to investments, right, please contact your financial advisor. Okay. Just a minute. My screen, this one. Okay. Okay. Some of you guys may not know what is ETF. I'll just briefly explain what is ETF. ETF is nothing but exchange traded funds. Okay. This is nothing but just like a stocks, right? We have stocks, bonds, and all those things, right? Just like that, we have something called exchange funds. I mean ETFs. That is called exchange traded funds. Okay. What is the difference between ETFs and stocks? Stocks is like every company, right? They announce. I mean, every company will announce its stock. I mean, they will come to the market using like this IPO,
Right, we
right?
have
From
stocks,
IPO,
bonds.
they'll come to secondary market. That, and finally it will get listed to a exchange. Okay, that is one on stock. One on company will be listed as one on stock. Correct. But exchange traded fund is not. It's not a stock, but whatever you are investing in ETFs, right, that will be distributed on many stocks. For example, if I am considering Nifty Bees, right, what is Nifty B? Nifty B is nothing but whatever you are investing, right, that will be distributed among the Nifty 50 stocks. Like for example, if you go here, right, let me go to the NSE website. Go to the NSE website, you can search here ETF. Okay. When you search here ETF, right, you'll see a lot of ETFs here. Okay. But we'll I'll just click on the main ETF so that it will take to me the main page where all the ETFs are listed. You can see here there are many ETFs here. You can see Nifty IT index, private bank index, PSU index, bank index. All these are all different ETFs invested on different sectors. Okay, but we gave a session on especially Niftybees, bank bees, and gold bees. Okay, but personally we started investing only on the Niftybees. Okay, let us see like how much returns it has given and what all the different factors if it affected during the 2020. Okay, considering all these factors, what is the percentage of returns it has given? Okay, before that you also know I'll just give an overview like how ETFs works. Just like a stock, right? How you buy a stock, you can buy that ETFs through your Demat account. Okay, like you open Demat account with Zerodha, SDFC, Fyers, whatever it is. There you can find these ETFs like Nifty IT, Nifty Private. You can see this name symbol, SBI ETF, ICICI Bank, Kotak Bank, like that. Okay, so you can search for these ETFs. Personally, we have invested only in Niftybees. Okay. So what he'll do is, as an investor, what he does is he'll buy those in ETFs through cash. I mean, that will go to the broker, and broker will get those orders filled with exchange, and those orders, whatever the order filled in the market, right, that will be again sent to the broker. That broker will send back to your Demat account, and those ETFs will be available in your Demat account. Okay, and once you are in profit, you can withdraw anytime. Okay, just like the stock, you can withdraw at any time. There is no restriction for withdrawing. Like, okay, it is not any locking system there. Like when you buy some mutual funds, right? They'll have some locking system, correct? It's not like that. You can close whenever you want. It just works like a stock. Only thing is here the risk is distributed. Whereas if you're putting on a stock, right, one particular stock, the risk is more there. Okay. You can see how, I mean, when you started, the tree was very small, and after that, see the growth here. This is how the SIP manner works, SIP. Okay, systematic investment plan. Okay, we'll go through that. How personally we invested. Okay.
So
Before that, right?
one second, Manju. So you said that the risk is distributed. So the best example is Nifty 50. Okay, if one company is not performing, right, so immediately that out of 50 company, if that company is not performing, it will be eliminated. So you can see that almost of 3 years back or 4 years back, Yes Bank was not performing, right, and a couple of very good stock was not performing, so
Correct.
they started removing it. So only
Yeah.
ETF will calculate only the Nifty 50 stocks, right?
Correct.
So that's going to benefit you, and that's the reason the risk is distributed. So if you invest only on the stock specific ETF or stock specific, the risk is only on that particular stock. So here you have a very low risk on this ETF.
And also, yeah, and also one more thing is, Nifty is what? I hope you know what is Nifty. Nifty, what it represents. Anyone? They can comment in the comment box. What does Nifty and Bank Nifty represent as a whole? Anyone? You can put your comment in the comment box. No idea? Nifty is representing our economy, correct? Stock of the nation. And what is this? What will the stock of the nation do? Of course, it has to go upside only. Okay, for that reason, these people, they keep on changing the stocks which are not performing on the index side. Okay. Hope you guys are getting. Okay, so for that reason, when you invest on index funds, right, your risk will be reduced. Okay, your risk will be distributed among performing stocks, not on junk stock. Okay, now coming to the main picture, right, like if you see in 2020, again the second wave started, coronavirus thing started, and many of democracies, like I mean in in USA, right, this guy got elected. I mean Joe Biden. I mean Trump was defeated, and there was a change in the democracy. I mean president, and after that, see this second wave, third wave, and now third wave also started. Considering all this effect, I mean considering all this, right, if you see the GDP, these are all the different countries of GDP. You can see here near 2020 there was a very big drop in the GDP. Okay, for all the countries, I am not telling about only India. Generally speaking, economy was affected very badly, correct? So considering all these situations, if you ask me, right, ETFs are the best way to create wealth. Okay, that is why we thought, like anyway we have completed 1 year from our previous video, and we also started personally investing in that. Why not showcase our returns itself? Okay, so if you see, right, when we started only on the investing on the as I said, only Niftybees. Okay, only, I mean this year we started with bank bees as well, but initially we started only with the Niftybees. Okay, how much we started with? From June 2020, right? Okay, because I started this just prior to giving the first session, I mean the session which I gave in the last year, right? Just prior to 1 or 2 months I started with my this one. From June 2020 started, every month I started investing only 2000 per month. Okay, and from Jan 2021 started with a new hope, right? I started investing 10,000 per month. Okay, so till now, how much I have invested? How much I have invested? There 7 months and here 7 months. Okay, 2027 months and here 7 months completed. So 70,000 this year and last year 14,000. Total 84,000 was my investment during this full that full year. I mean from last 2022 2021. Okay, if you see the right, if you see the graph here, this is the price where I bought it, 107.25. that is the price we personally bought it. Okay, if you see from 107 it has moved till 185 somewhere here. Okay, this is somewhere near 185, but even if I take a closing price, right, it is 170 rupees. Okay, you can calculate the percentage wise how much the price has moved. Okay, close to almost how much, 60 to 70%, correct? Okay, so this is the returns it has given considering all the negative things. Okay, second wave, third wave, whatever it is. Okay, considering all these factors, it has still given a positive returns. That is what I'm trying to say to you. Instead of getting, I mean, without knowing proper knowledge on investments and this one, right, SIP, don't go and invest in some mutual funds or something which you don't know. Try to invest in these kind of stocks, or many people they believe in FDs. Okay, I agree that FD will give you a good return, I mean minimum return, but considering the inflation, right, whatever you are getting, that is gone there. So at least if you start putting here, right, you'll get a very good returns. Okay, I'll show you this one example. Okay, if you see here, right, there is a, if you search in Google, you'll come to know SIP calculator. Okay, I'll show you one example here. I'll just click on calculate now. Okay, imagine you are investing just 1,000 per month. Okay, investing for, say, for next 20 years I'm planning to invest every month 1,000 rupees. Okay, I have selected my long term here. Okay, when I select this one, right, if you see here, you can see here it gives me the details. Okay, at on the, I mean today is what, 2021, and I am planning to invest for another 20 years. What is my amount? Say ₹1,000 per month. I am not putting more. I am just considering minimum example. ₹1,000 per month. Okay. How much it is expected to grow by 20 years? Your investment is 2,40,000. Okay. And what is the wealth gained? 7,59,000. Imagine. Okay. And here they are given on the right side. If you see here, right, what is the FD? They give almost 6%. Okay. But if you are considering the minimum worst case 10% also, you are getting this much returns. This is worst case 10% I am considering. But on an average, Nifty is giving at least 15%. Okay, so if you consider 15%, see the returns, how much it is giving here. Your investment is 2,40,000, and what is your growth? 13 lakhs. Okay, now if you see, right, I'll just increase this 1,000 to 2,000. See the returns, how much it is changing. Okay, so I think most of us, right, we have like at least we can afford to invest 5,000, I guess. Okay, so considering 5,000, we would arrive at these results: 65 lakhs on the 14% average. If you're considering 12%, it will be around 49 lakh 95,000. Below average, that is 10%, the worst case I'm talking about, you'll get 38 lakhs. Okay, this is how SIP works. But many of us, right, what we are doing, we are entering morning, and by, I mean, market opens at 9:15, we are entering at 9:30, and by 10 o'clock we want 50%, 100% returns. That is what we are doing. Correct? So don't do that. Okay. And now coming to our own investments, right? Let me go to the screenshots. Okay. If you see right here, on June 5th we started, okay, investing. I mean, as I said, only 2,000 we were investing. Okay, during that time when I started, like the price of Niftybees was 107.25. Okay, this is screenshot from my Zerodha account. Okay, so on June 5th I started. Okay, and till now, I mean, recently this month also I invested. Okay, and if you see the current price of bank bees, right, I mean Niftybees, it is 170.57. I started with 107, and now the price is 170.57. So if you see, right, overall returns, I mean, this is the quantity I bought. Okay, if you see overall return on investment, if you see ROI, right, as I said already, 7 months this year, and last year 7 months I have invested, so total it comes to 84,000. Okay, present value is 95,000, and if you see unrealized profit or loss, 10,000. That is the rate of interest I got is, I mean, return on investment is 13%. This is considering all the worst scenario. In between, this was showing as 18%. Okay, because of, I mean, recently there was a fall in the Nifty, right? So after that, it has reduced. But even if you are getting 13% is also a very good returns. Okay, you can see here quantity till now I bought is 557. Okay, my buying average is 150, and current value is 170. This is average because I started with 107 rupees, so I keep on adding every month, right? So obviously your average will change. Okay, I'm doing like a pyramid investments. Okay, and if you see, this is the rate of interest which I got only for a year. Imagine if you are investing for this, I mean, if you are continuing for another 15-20 years, what will be the returns? As I already showed you in the SIP calculator, you can see here, if you start here, I mean, you can put your amount and number of years, and what is the rate of interest they have given, considering all these three different rate of interest: 10%, 12%, and 14%. Okay, this is what we wanted to show you in this today's session. So I would request you guys to start investing in ETFs, no tension, nothing. No need to watch every time markets. Whenever the market, I mean, see, you all know that market will fall in a month, right? Once or twice it will come down. Okay, that is the time where you are going to invest in these ETFs instead of investing in mutual funds and all those things, right? You can directly invest in these funds. I mean, whenever Nifty is falling 100 points, 200 points, go and invest. That's it. Like every month, keep on investing whatever you like, the amount, whatever you can start with any amount. Okay, but the longer the time, the more the profit or the more the returns you will get. Okay, this is what we wanted to share. Anything else, Hemant? From my side, it's done.
So nothing else, Manja. So let me share my screen.
Hemant, you there?
Sorry, I was on mute. Okay.
Okay. Yeah.
So thank you, Manja, for your time. Thanks, guys, for watching our Chart Traders channel. So see you on the next video. Hope this is very helpful, been helpful for all the retailers. Try to start investing in ETF. See you on the next video. Happy trading, guys. Thanks, Manju.
Thank you.
Yeah,
Bye.
cheers. Bye.
Thank you. Bye.